happening in Caribbean. So large parts of Cuba lost power after a major failure at one of the island's biggest power plants. The shortage started when a thermoelectric plant suffered a boiler leak, which triggered a cascading failure across the national power grid. Within minutes, electricity was cut off across large parts of the country. So millions of people suddenly lost power. State television went off the air, radio stations were knocked offline. Officials say it could take at least 72 hours to restart the plant and stabilize the grid. But this blackout actually is not the first time in Cuba. This is not something new for the country. Cuba's electricity system has been under pressure for years. The country relies heavily on very old oil-fired power plants, many of which are decades old and poorly maintained. Fuel shortages and aging infrastructure have already caused multiple large blackouts in recent years in Cuba. And because Cuba produces very little of its own oil, it depends heavily on imported fuel to keep the power grid running again. And for many years, Cuba relied heavily on oil from Venezuela. That supply, of course, helped power much of the island's electricity system, but shipments have dropped sharply as Venezuela faces very own economic and political issues. At the same time, new pressure on global oil supplies is making it much harder and more expensive for Cuba to find alternative fuel. And that combination, so we have aging power plants and limited fuel, it has made the country, so far, the electrical system very fragile. And for people in Cuba, these outages have a major impact on their daily life. Power cuts can last many hours each day, especially outside major cities. So without electricity, that means businesses will shut down, food storage becomes very difficult, transportation slows, even hospitals might have to rely on backup generators. Some households have even turned to charcoal cooking when electricity and gas supplies run short. So you might wonder, why does this matter outside Cuba? Because most of the viewers don't live in Cuba, right? So actually, energy crises like this highlight how fragile power infrastructure can be when fuel supplies are very limited right now. So in today's world, where global energy markets are already under pressure, countries that depend heavily on imported fuel are especially vulnerable. Cuba's blackout is a reminder of something bigger. Electricity is the backbone of modern economy. So when the power goes out, everything stops, including the country's GDP. And that's why energy security is becoming one of the most important issues governments are facing today. So let's shift gears a little bit and let's turn to a new report about AI and job market, the labor market. And this one is getting a lot of attention in the AI world. So there's a new study released by none other than Anthropic, so the AI company, says artificial intelligence could affect millions of jobs. But the surprising part is this. AI is already capable of automating much more work than companies are actually using it for today. In other words, the technology is mostly ready, but businesses, laws, and systems are slowing the adoption down. The report was published literally just yesterday and looks at real usage data from Claude, so of course the Anthropic's AI model. So researchers compare millions of AI conversations with official US job data just to see what work AI is actually helping with today. So according to the report, some of the most exposed jobs right now, they include, so the first one on the list is computer programmer. So 74.5% observed exposure. because like the writing, updating, and maintaining software programs, it could mostly be replaced by AI. The second on the list we have is customer service, so 70%, because like customer service, they might talk to people on the phone, and again, that could be replaced by AI. The third one they have is data entry kiosks, so 67%. And then we also have medical record specialists, 66%. So these jobs, they have high exposure and really high risk that they will get replaced by AI. But like that doesn't mean these workers are being replaced right away. In fact, what the report found something is quite interesting. So companies are not firing workers just yet. Instead, what these companies are doing is that many companies are simply hiring fewer new employees. So the data shows the biggest impact is happening in entry-level hiring. Since the launch of tools like ChatGPT in late 2022, hiring for young workers in high exposure jobs has dropped by about 14%. That means companies may not replace existing workers immediately, but they might stop hiring new graduates for those kind of roles. So the first group feeling the pressure could be young professionals entering the workforce. Another key takeaway for this report is there's basically a huge gap between what AI could do and what it's actually doing today. Researchers created a chart comparing the theoretical ability of AI and also the real-world usage of AI, and that gap is massive. For many jobs, like AI is technically capable of handling most tasks, but companies are slow to adapt the AI technology because of things like legal restrictions, integration with company systems, human verification requirements, and internal company policy. So right now, AI is being used for only a small portion of the work it could potentially handle. And the report also highlighted which jobs are least affected by AI. So many physical jobs still show almost zero exposure to AI tools. So these roles include like bartenders, dishwashers, construction workers, lifeguards, mechanics. So as you can see, like most of the jobs that require some physical work is still not very exposed to AI, or in other words, it's not at risk because of like AI being replacing their jobs anytime soon. These jobs around, like researchers estimate that about like 30% of workforce still falls into this category. However, in my humble opinion, like humanoid robots will be out in the next 5 to 10 years. So like even physical labor could be at risk, but like this is something down the line. So what does all this mean for the economy? The key message from the report is that AI disruption may come gradually rather than all at once. The technology already exists, but real-world adoption is happening very, very slowly. That could mean a period where productivity increases without massive layoffs, but it could also mean tighter hiring markets, especially for entry-level white-collar jobs. And that's why economists, businesses, and investors are watching this trend very, very closely, because as AI tools continue improving, the gap between what AI can do and what companies allow it to do may start closing. And when that happens, the impact on the job market could accelerate very, very quickly. All right, so we will take a short break for now. And when we come back, we're diving into the New York state because like apparently New York is driving all the innovation away from the state. So do stay with us. We'll be right back.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this
This is Bitcoin.
Bitcoin?
It's not just a cat, his family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxum, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxum, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back to Roxham TV, and thanks for sticking around with us after the break. Just before we hit on the break, we were talking about how centralized entity slowing things down to adopt AI. One prime example we have is in New York, because it's known to be lag behind than the rest of the world we have. So New York lawmakers are moving forward with a new bill that could drastically change how AI chatbots like ChatGPT, Grok, and Claude operate inside the state. Some critics are even calling it the next big license moment for AI, referring to the strict crypto rules New York passed years ago that pushed many crypto companies away from the state. So here's the key point. Like, this is actually not a full ban on AI. Instead, what this is about is it's very aggressive liability law targeting AI systems that give professional advice. And if this passes, companies operating AI tools in New York could face serious legal risk. And what this bill we are talking about, so this Senate bill is the S7263. It targets AI chatbots that give advice in professions that normally require a licensed human professional. So that areas would include medical advice, legal advice, therapy or mental health guidance, and engineering or architecture advice. In total, this law would cover more than a dozen licensed professions. Under this proposal, if an AI chatbot provides substantive advice in these areas, the company running the chatbot could be held legally responsible for damages. And here's the very important detail about this bill. Even if the chatbot clearly says this is not professional advice, the company can still get sued. Disclaimers would not protect the operator from liability. And another major piece of the bill is enforcement. Instead of relying on regulators, the law gives individual users the right to sue. If someone claims an AI chatbot caused harm by providing advice, they could take the operator to court, and that includes the ability to recover actual damages, legal costs, attorney fees in some cases. Critics say this creates a huge legal risk for companies building AI tools. And this bill right now was not introduced last year. Actually, it was not introduced this year, but it was introduced last year. It recently passed a key committee vote in the New York State Senate. Now it has moved to the Senate floor for a full vote, which could happen very soon. If it passes and becomes law, companies would have about 90 days to comply. So that means major AI platforms might need to quickly change how their chatbots respond to users in New York. So for people living in New York, this would impact, the impact is quite noticeable. AI chatbots may start refusing to answer many questions. For example, questions like, okay, why does this rash look like this? Do I have any skin problem? Maybe can my landlord evict me? Or is this contract legal? Stuff like that. So companies may simply block these topics just to avoid legal risk. Some platforms may even restrict certain AI features entirely in New York. Many critics say this law could repeat what happened with crypto regulation in New York, because back in 2015, the state introduced BitLicense, which is like a strict regulatory framework for crypto companies. And the result for that, many crypto companies decided it was too expensive and risky to operate in New York. So instead, they moved to other places like Miami, like Texas, some even overboard to Singapore and Hong Kong. Some critics believe this AI bill could create a similar situation. Companies might simply just block New York users rather than risk a lawsuit. While New York moves towards much stricter AI rules, other states in the US are doing the opposite. Like states like Texas and Florida, they are trying to attract AI companies with much lighter regulations and lower taxes. That means talent and investment could shift away from heavily regulated regions. And in the race to build the next generation of AI technology, that competition between states is becoming more intense. The bigger question perhaps we could ask here. So supporters of the bill say the goal is simple, like they want to protect people from harmful AI advice, especially in areas like health and mental well-being. But critics say the law could go too far. Instead of making AI safer, it could make companies avoid offering useful tools altogether. And that raises a much bigger question. Like, as artificial intelligence becomes part of everyday life, how do governments protect users without stopping innovation? Because the answer to that question could shape where the future of AI gets built. So speaking of AI, we also have new updates from ChatGPT. So OpenAI has launched GPT 5.4, its most powerful model just yet. But the timing-wise is really interesting, is raising a lot of questions. A new model was released just days after the previous version, and it comes as OpenAI faces a growing backlash known as the QuitGPT movement. So millions of users have reportedly taken action against the company after it reviewed a controversial partnership with the US Department of Defense. That deal would allow OpenAI's the AI models to operate inside classified military networks, and that reaction online has been very, very intense. The controversial began when OpenAI confirmed the Pentagon contract. So at nearly the same time, rival AI companies, so Anthropic, reportedly refused the same deal because it would not include restrictions on autonomous weapons and domestic surveillance. After that news broke, social media erupted. So within days, ChatGPT app uninstall rates surged. Negative reviews jumped sharply, and an estimated of 2.5 million users joined the so-called Quit ChatGPT movement, the boycott online. Many users say the move contradicts earlier promises about AI safety and responsible use. And now, in the middle of the controversy, OpenAI just rolled out ChatGPT 5.4. The company says it's the most capable model it has ever been built. Like, one of the biggest upgrade is a massive context window of 1 million tokens. So in simple terms, that means that the AI can process huge amounts of information in a single conversation. So that means longer reports, large documents, or complex projects. The new model also improves reasoning ability, coding performance, and so-called AI agents, which can complete multiple step tasks automatically. According to OpenAI's internal benchmarks, GPT 5.4 shows major improvements over earlier models. So in tests that simulated real knowledge work across dozens of jobs, the model performed at or above professional level in 83% of comparisons. That is a significant jump from about 71% in earlier versions. Another big improvement comes in computer control. In a test measuring how well the AI can operate a computer using screenshots and keyboard actions, GPT 5.4 reached a 75% success rate, even slightly above the human benchmark. However, the biggest benefits, might not be for several users. So instead, enterprise customers appear to gain the most from this upgrade. Companies using OpenAI's API say the model can complete tasks much faster while using fewer tokens, which of course reduce computing costs. For example, one property tax automation company reported that GPT 5.4 completed tasks 3 times faster while using about 70% fewer tokens. For businesses running large AI systems, that kind of efficiency can, of course, translate into significant cost savings. But for regular users like you and I, the improvements may feel more gradual. Some benchmark shows only very small performance gains compared with the most recent model. And at the moment, GPT 5.4 is still being rolled out very, very slowly, meaning many users may not have access just yet. In fact, some of the most advanced reasoning features are still limited to earlier models for certain users. So this release comes as at a very sensitive moment for ChatGPT. On one hand, the company is pushing forward with faster and more powerful AI systems. On the other hand, the backlash around this military contract has raised serious questions about the future direction of AI development. And that tension highlights something bigger happening across the entire tech industry. As AI becomes more powerful, the debate isn't just about how the technology can do, it's also about who controls it and how it should be used. All right, so now let's turn to a shocking story involving Bitcoin. And Bitcoin, not just Bitcoin, but also the US government and an alleged insider thief. A man accused of stealing more than $46 million in Bitcoin and crypto from wallets connected to the US Marshals Services has just been arrested in the Caribbean. So the suspect, John Decatur, was captured on the island of Saint Martin during a joint international operation involving the FBI and French authorities. So according to investigators, this case may involve insider access to government crypto systems, raising some very serious questions about how billions of dollars in seized Bitcoin are being protected. So who's this suspect? Now, authorities say the suspect had a direct connection to a government contractor. So John Decatur is the son of the CEO of a technology company that had been working with the US Marshals Service. That company was reportedly hired to help manage and process seized digital assets, including Bitcoin and other crypto tied to criminal investigations. Because of that role, investigators believe Decatur may have had access to systems connected to government-controlled crypto wallets, and that access is what authorities suspect allowed him to move funds. So, blockchain investigators say they trace suspicious transactions linked to wallets associated with the suspect. One wallet allegedly connected to him held about 12,500 ethereum, worth roughly $36 million at current prices. The most notable transaction happened in October 2024, when about 20 million in crypto was transferred out of wallets believed to be linked to government-controlled funds. Interestingly speaking, most of these funds were sent back to the original wallet within 24 hours. But investigators say around 700,000 routed through instant exchange services was never recovered. Further blockchain activity suggests the total amount involved could exceed 90 million when additional transactions are included. So this case is drawing attention to something many people don't realize, is that the US government is holding some enormous amount of Bitcoin. So according to BitcoinTreasuries.net, like US is of course sitting at number one in terms of government entities holding Bitcoin. So on the balance sheet, they have 328,000 BTC. So like these BTCs, through like law enforcement seizures, government agency have accumulated from like dark web, ransomware operations, cybercrime cases, major hacking investigations. So at current prices, this stash of Bitcoin is worth like tens of billions of dollars. That makes the US government the largest government entity holding Bitcoin among the whole world. But here's also an important detail. Most of that Bitcoin was not purchased by the government. So instead, it was like confiscated during criminal investigations. Some of the biggest holdings came from cases like the Silk Road, the dark web marketplace seizure, some major hacking investigations, and crypto fraud and ransom cases. Historically speaking, the US Marshal Service has often auctioned off this seized Bitcoin to private investors. But discussions in Washington about creating a strategic Bitcoin reserve have brought new attention to these holdings. This arrest is also raising serious questions about how government crypto assets are being stored and protected. Unlike traditional bank accounts, cryptocurrencies can be transferred globally within minutes. That means custody and the key management are critical when institutions are holding large amounts of digital assets. Federal agencies have sometimes relied on outside contractors to help manage complicated crypto seizures. But this case could lead to calls for much stronger oversight and tighter security procedures. So this case does very matter because if the allegations are confirmed, this could become one of the largest insider crypto thief investigations linked to the US government. It highlights a major challenge in the digital asset world. As governments and institutions hold billions of dollars in cryptocurrency in Bitcoin, securing those assets becomes just as important as seizing them. And this case may force authorities to actually rethink how digital assets are managed, stored, and protected. All right, so we'll take a short break for now. And when we come back, we will turn to how Wall Street and cryptocurrency coming together and building something great. So do stay with us. We'll see you after the break.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxum, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxum, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back to Roxham TV, and thanks for sticking around with us after the break. So now we're diving into a major development connecting Wall Street and the crypto market. So the parent company of the New York Stock Exchange, ICE, like Intercontinental Exchange, has just announced a strategic investment in the crypto exchange OKX. So the deal values OKX at around $25 billion and gives ICE a seat on the company's board of directors. This move signals something much bigger. One of the most powerful operators in traditional finance is now placing a direct bet on crypto market infrastructure. So, under this partnership, ICE plans to license spot crypto price data from OKX. That data will be used to launch US regulated futures contracts tied to crypto markets. At the same time, OKX's massive global user base could gain access to ICE's regulated futures markets and tokenized equity products if regulators approve. The two companies are also exploring the creation of a joint venture that could bring OKX trading infrastructure directly to US investors. So, in simple terms, this deal is trying to connect crypto exchanges with traditional financial markets. And OKX is, of course, no small player. The exchange say it serves more than 120 million users worldwide, and it has processed trillions of dollars in trading volume. It is especially known for its crypto derivatives market, so including Bitcoin futures and perpetual contracts. Those derivatives markets play a huge role in price discovery for Bitcoin, often driving volatility across the entire crypto ecosystem. So by connecting OKX trading data, ICE is effectively linking traditional feature market with crypto native liquidity. And for Bitcoin, like of course, it sits at the center of this relationship. Most crypto exchanges rely on Bitcoin trading activity as the primary source of liquidity. And futures market in traditional finance depend heavily on accurate price data from underlying spot markets. Since Bitcoin spot trading mostly happens on global crypto exchanges rather than a single centralized exchange, partnerships like this help connect those dots, those two worlds together. For institutional investors, this could open new opportunities for hedging risk, arbitrage trading, and structured financial products tied to Bitcoin. And this investment also fits into a much broader strategy from ICE. Instead of building crypto platforms from scratch, the company is now investing in existing crypto infrastructure. In recent years, ICE has explored several areas of the digital asset ecosystem, including prediction markets, crypto payments infrastructure, and tokenized securities. The goal appears to be positioning ICE as a company that provides the financial plumbing connecting traditional markets and digital assets. So ICE is, of course, like not only one major financial institution moving into this direction. Other big players are also expanding into digital assets. For example, Nasdaq is also exploring tokenized securities markets. Morgan Stanley is developing crypto trading features. Fidelity continues expanding its institutional crypto custody service. But ICE's strategy is slightly different. Instead of building everything internally, it's partnering directly with a major global crypto exchange. And as traditional financial institutions build more products tied to Bitcoin markets, the infrastructure behind crypto trading is becoming a critical part of the global financial system. All right, so speaking of crypto and Bitcoin, let's move on to some Bitcoin's price action. So let's do a quick price update. There's a lot of lines, so let's start with the short term, so daily candles of Bitcoin. Well, Bitcoin has been going on a very generous rally, and especially, I would say, like ever since 2nd of March. Like from 2nd of March, if we take the high, we pump up to like 74K at one point. So that was a very generous 13% gain in a matter of 3 days. So point being, a lot of people say, okay, maybe the bear market is very short-lived. Maybe we are heading to higher places after all. So I hated to break it to you. Like, okay, I'll start with the good thing that I saw from the price action. So one thing I noticed is that we are holding this rising support trend. We have been building this ever since 6th of February. So we have been holding this support rather well for a month. And if we take a look at the daily RSI as well, so we've been holding the support, like bouncing off whenever we try to drop below. So this is one thing I like to see, and it also justified the rally in March because but past 5 months, it has been extremely brutal. Like we have started the dip ever since October. So 1, 2, 3, 4, 5. So 5 months, 5 consecutive red months for Bitcoin. This is something rare because like this has only happened one time during the entire Bitcoin incidents and Bitcoin history. So the incident actually happened back in 2018, so August 2018, and it carried on till January 2019 for 6 consecutive months. So this is extremely rare for Bitcoin's historical price action. Maybe March we could finally see a tiny rally, a relief rally that we have been waiting for. But like the point being why I don't think we are out of the wood, and I'm not calling the end of a bear market anytime soon, because like this level I'm watching very closely. So this region that I drew is around like 78k to 80k. So this region, like whenever first of all, I have strong doubt that we would even try to touch this region. Second of all, like even if we touch, like I'm not so sure that Bitcoin will manage to stay above that. The reason why I would have my skepticism. Okay, let's hop on to the weekly chart we're looking at right now. So let's close the Ishimoku cloud. It's a little bit confusing. So the reason why I would say this is because like if we zoom out and look at the downtrend, so this downward movement we have built ever since October 2025. So one thing is very interesting because like whenever we get close to the resistance line again, we have this rally back. We had this the correction. Let me see. So Bitcoin was like rallying back, so maybe like a 25% correction. So we're out of the wood, but like this is the very same conversation we had back in January here on Roxham TV. We're talking about the price every single day, breaking it down. So basically breaking down the noise, cutting through the noise, because like it could be quite chaotic, especially if viewers out there use crypto Twitter, because like there is quite a lot of like it's a cesspool out there in crypto Twitter. So this is one of the major reasons that I think this rally, it could be just a relief rally after all. So like if we look at this downtrend, like we're not even close to the resistance, like the major resistance of this downtrend after all. So yeah, I mean, I don't know what these people are on about when they think, okay, maybe there's still a very short-lived bear market after all. So this is one reason. The second reason, let me bring up the Ichimoku cloud. So this is a leading indicator that I love using. So if we take a look at the previous cycle, so back in the bear market in 2022, we were consolidating. So we were having this very joyful rally, and for actually quite some time. So things were going up before we completely lost that. So we have been going up for 3 months. So if we look at this pattern, and it looks like awfully similar. And okay, right now we have dropped. Okay, we have dropped to even below the Ichimoku cloud, and this is of course something very, very bearish as well. And this drop, ever since the we lost the Ichimoku cloud, it was very severe. And yet, if we look at June 2022, we yet had another relief rally before finding the exact cycle bottom at around 15.5K. That was the previous cycle that we had. Like, of course, like the previous cycle doesn't justify what we're going to see in the future, but it's like a reference that is telling you that having a relief rally like this, it is not unprecedented. It is not uncommon. So like, that is the second reason. And that reason, if we zoom out like this, it still looks like maybe we're building up another bear flag before heading to lower. So how low we're heading to, I have drawn, like as you can see, I've drawn some like key lines of resistance and also support. So one level I'm watching at $57,000. Another one is 44, actually like 44, 45, somewhere around there. So like these levels are super interesting. Like if Bitcoin would ever drop to as low as these levels, like I would stack up Bitcoin at a much bigger scale. So like that's why I'm not afraid of a bear market at all, because bear market is when you can build generational wealth. All right, so let's turn to a story at the intersection of crypto, NFTs, and some traditional brands. So the popular crypto brand Pudgy Penguins, I'm sure a lot of viewers on Roxham TV is not have heard of this brand before. So Pudgy Penguin is facing a lawsuit from a major parent company. So the firm behind the original penguin clothing brand has filed a trademark infringement, some lawsuit in a U.S. federal court. The company claims that Pudgy Penguin is using the branding that could confuse consumers and damage its legal test for. Let me know what you guys think about these two brands. Do you think the logos look similar? So the lawsuit was filed by Pi, so Pi Licensing, the company that operates the original penguin apparel brand. According to the filing, the company says Pudgy Penguin has used penguin-themed logos and trademarks that are too similar to its own. Pi said it used a penguin designed in fashion since 1950s and has held official trademark rights for decades. So the company argues that Pudgy Penguin on the right side, that the branding of Pudgy Penguin could mislead customers into thinking the two brands are connected. In legal terms, that's called a trademark infringement. Now, like Pudgy Penguin, like of course, it becomes so massive. It's definitely not just some NFT project anymore. Pudgy Penguins first launched as a ethereum NFT collection in 2021, but since then it has grown into one of the most recognizable brands in crypto. The project has expanded into like physical toys sold in major retailers like Walmart and Target, some community token called Pengu, and of course like some clothing and merchandise sold online for the Pudgy Penguin brand. In fact, its toy line reportedly generated more than $10 million in sales within its first year. So that success is exactly why the legal dispute is happening right now. The crypto brand is expanding into the same types of products as traditional apparel companies. So Pi Licensing said it actually won Pudgy Penguins years ago, According to the lawsuit, the company sent a cease and desist letter in October 2023, asking the crypto brand to stop using the Penguin trademarks. Pi also filed challenges with the U.S. Patent and Trademark Office against some of Pudgy Penguins' trademark applications. But the lawsuit says the crypto company continued using the branding anyways. Because of that, Pi claims the actions were very intentional and damaging its brand reputation. So Pi Licensing is asking the court for several things. First, it wants financial compensation, including profits from products that allegedly use the confusing trademarks. Second, the company wants the government to reject Pudgy Penguins' trademark applications. And third, the lawsuit asked the court to remove and destroy products that carry the disputed branding. Pudgy Penguin, how they reply is that they were very surprised by the lawsuit. The company said both sides had previously been discussing the issue privately. Its legal team argues that two brands were visually very different and targeted completely different audience. They also say the company has already secured multiple trademark approvals for the Pudgy Penguin brand. Because of that, the team said is confident that it will win the case. But guys, let me know if you think these two logos look familiar. I mean, penguins are an animal after all. In my opinion, I mean, if we take a look at horses logos, there are more than 100 brands out there use a logo of horse. So I don't see them suing each other to death because both of their logos have some horses on the brand. So some of these brands are luxury brands like Hermes, of course, like Ferrari, they all have horses, but now they have an issue with penguins. So I can't seem to able to wrap my head around. So this lawsuit highlights a growing challenge for crypto native brands moving into the real world. Projects that started as NFTs or digital communities are now launching physical products, so toys, clothing, and retail partnerships. But once those brands enter traditional industries, they must compete with companies that have held trademarks for decades. That means more legal battles like this could appear as crypto brands continue expanding into mainstream markets. And this case could become one of the first major trademark fights between Web3 brands and also legacy companies. All right, so that is all we have got for today's show. So before we go, make sure to give us a follow on Twitter. My personal Twitter is gemcrypto_io. Make sure to follow Roxham TV on Twitter as well. So it's just @Roxham TV, very easy. So we have so much valuable content every single day on an hourly basis, not just about global news, geopolitical news, but also about Bitcoin, of course, finance, AI. So point being, there is so much valuable content you probably don't want to miss. So make sure to give us a follow on Twitter. So as for my show, is from Monday to Friday. I'm changing my live show time to 2 a.m. Eastern time next week. So be sure to tune in live. If you don't manage to do live because of your local time zone, don't worry about that. The replay is also available on both Jam Cryptos and my own YouTube channel, and also on Roxham TV YouTube channel. Thanks for watching, and I'll see you guys next week.